200-day moving average, if that's 1%, and my 200-day moving average is up, 200-day, right? That's a great signal. That's a great signal. And all I had to do that year, if I picked that up there, I've captured all for the year. I've been a very patient trader. I've been patient through this time. Because if you look at that, the price is the same there as then.
So would you then go to your hot stock?
Of course, because if I'm going long, I go to the hot sector to the hottest stock. That's probably going to be like CSL or Afterpay at that time, you know what I mean? Those sorts of stocks. Yeah, that's where I'm going. No, mate, it's not rocket science, this. I want to give myself the best edge that I can. Does that make sense? As I explained to you before, if you don't have an edge, you've got nothing. But to me, that's an edge. That there, trust me, ladies and gentlemen, just start watching that alone. You can just be an investor doing that. You don't have to trade. Using that 200-day moving average, seriously. Took me a long time, and I didn't used to worry about moving averages, except this here I'm just convinced. Now this from the investors use that 200-day moving average. Easy, easy. Remember, I'm showing you the XJO, which is the ASX 200, okay? And remember at the beginning, I just want to remind you, this is about principles, right? So you apply this to each stock. Now, remember that time where the tap trade, we were a little bit under? Now, the hot stocks still would have been over their 200-day moving average. Does that make sense? I don't go ding, 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 oh, I'm going to sell everything because it's gone over there, right? And as you saw, and as I know as a trader, the market will just do what it wants. Remember I told you, it doesn't care, you think, me think, it doesn't care. It'll just generally amount to where it can inflict the most pain on the most people. No, it's just smart money. That's what they're doing to you.
So would it be fair to say that if the fund managers, whether it's superannuation or hedge funds or just fund manager, whatever, kept the simple principles, and we're trying to look for some sort of indication where the money flow is.
Yeah.
Hence, that's what we're talking about.
That's correct. It's all about money flow, right? Very good word. That's what I use. I call it money flow, right? So I don't have today, I mean, to teach you to trade take me weeks, right? So I'd go, yeah, we look at, you go from the global view, you go into our market or what market you're trading, then you need to go into the sectors, then you need to dissect what's hot and cold, right? There's quite a process to doing all this, right? It's not just, let's go. And if you do that, you give yourself an edge.
Do you find the hot and cold sector plays more relevant to the US rather than Australia because of the volume of traffic in the US rather than here? There's single stocks that can take the sector one way or the other.
Yeah, that's a good point. I try not to get hooked up, but look, if I think about it, right, I think you're on something bigger. To be honest with you, sir, it's like I just used to trade the Australian market, and that's another reason I'm showing you this, right? I'm going to show you the American charts, and I'm going to show you where I got frustrated with this, and when I need to go to green pastures, knowing what I know, right? We're going to talk about that at the end, right? So yes, and I mean, I don't want to, what's the word I want to use? I don't want to crap on the Australian market. I mean, 40% is a handful of stocks. It's the banks, BHP and Rio, I mean, and this is a reflection of that. So please don't judge me like that. I'm just showing the principles here. Does that make sense? But it still works with what I'm showing you here, right? However, all that's in the backdrop, right? When I'm going over these markets and I'm thinking, I'm looking at financials and materials, how it's going to affect the XJO, and it's quite complex, right? You've got a very, very good point. However, theoretically, it's still correct what I'm saying, right? Yes, and you have the anomalies, and sometimes you've got to go with the anomaly, right? If it's one stock in a sector. But if it's going off its nuts, I'm not going to argue. taking price action. I know it's right. And that's why I trade all the momentum stocks. If you ask me, if I gave you a handful of list, you go, hang on, they're all the ones making new highs. I go, yep. It's the ones I want to be in. Does that make sense? And I tell you, 7 out of 10 each month keep going up. And I just peel that way, and you momentum stock raises ahead the next month, and I cut that in there. They talk about watch lists. You don't need hundreds of stocks. Don't do it to yourself. Keep a handful. Do this exercise, do the work up front. Yeah, I'll get to you in a sec. Have these watch lists and go in and then get to know your animals. You get to know them. You're going to ask me about some charts, and I'll say I can't tell you about that. I can't even tell you the charts, so I just go, no, not trading that, there's nothing to trade. But we'll go through that.
I didn't want to ask a question, but I just
Yep.
wanted to add something to what you said. Watch lists. There is, if you have a method that works, this is my experience, a method that works, okay, irrespective, and you want to trade it, right, it'll work for just about anything.
Sure.
Okay, so a lot of people, because I just joined a few months back, I don't go there anymore, another traders club, and they are huge on watch lists. And for the life of me, I just don't understand why would you want to tie yourself to watch lists that you selection based on fundamentals and then trade that. And I'm thinking, that's really tying your hands behind your back sort of thing. The best thing to do is to find a method that works and you can use it for trading as well as investing. Sorry.
No, but I'll add on to that. Ultimately, as traders, you've got to find your own way, right? And you know what? I've seen so many ways to people trade, and you can make most of them work, right? Most of it's about money management, right? And yourself. Now, if I wanted a stock, and when we go to stock session, I'll ask you, why do you want that stock? You know what I mean? And you go, because I love it. And you go, okay, because you love it. The thing is, I sort of do that.
Sort of do what? Sorry.
What they do, if the market craps itself, right, I'll have about 4 stocks, not many, that I'd want to pick up that I think, and please don't, it's like, CSL's just been, like it's just been a hero for the Australian stock market, right? And it just keeps going up, like it's unbelievable. And it's a great company, you know what I mean? And we need those products. Now, I mean, to have that on the stock list, have I got it on my stock list? Yeah. Am I in it at the moment? No, because I got stopped down and then I did a melt up and I couldn't get back in. Except I'm not going to chase the stock. But I know what? I'd like to have it back in my stable. I'm just being honest with you, right? So if I keep it for that rationale, I don't have a problem with that, right? And I have a list of about 30 stocks that I watch religiously. Some of them might take me a year and a half to get into. They can be some of my best traders. That's patience. Darryl Guppy used to say that, it's like being the sniper in the bush. Yeah, rabbits are quick. If I want to get that rabbit, I have to sit in that grass there for days, maybe. And the big black hair comes, that red black hair comes up, I just go, bing, got it, right? But I don't wait for that. It doesn't come to me. If I don't have it on the watch list, I can tell you from experience, I go, oh, I wanted to buy that at 100. Oh, I didn't see it till it was 160 again. And guess what? It's in a melt up. If I'd watched it every day on my watch list, I would have picked it. And that's why they do that. And so I don't have an issue with that, right? And you can say to me, why do you spend that time? I make it pay for me, because that's an edge for me.
I'm going to come back, but I think we're strapped for time.
No, we aren't strapped for time. We're getting bogged down, so thank you for that. Look, we're nearly getting to the end. But there's more. Have I covered all this? So 2018 wasn't a good year by the looks of it, because we start here and there. Can anyone tell me what pattern that is?
Upward channel.
What sort of channel?
An upward channel.
Yeah.
Same.
I call it a bearish flag. Flags? Does anyone know flags? Everyone's looking at me like someone died in the room. the trades flags? Deborah?
Yeah, I do. I just
Okay.
forget their names.
Oh, okay, sorry. I use names so we all know what we're talking about, right?
Yeah.
So upward channel, that's not wrong. So if I have price action doing this, and then it does that, that, generally to me, that is a bearish flag, bullish flag. Where stock goes up, and then it consolidates, comes down, right? It's called breathing. So market needs to breathe sometimes, right? So it breathes and it goes up. See that one there is pointing up? Now, that can be, so there's that, and then, I'm trying to draw it, not a good drawer. That's a bearish pennant. I just want you to see this because we're going to 2019 shortly, and this is 2018. That's a bearish flag building, right? So to me, when it breaks down, look when it broke down. It's dropped about 2% through the flag, right? It's like all the traders woke up one day and saw it and went, that's bearish flag. The other thing is that it's very stretched. Now, Bill, once again, you're correct. I would be looking at the weekly chart because see this MACD indicator I have there. I prefer to look at it on the weekly chart because I'm looking for NAC divergence, if that makes sense. And this one's giving it to you a little bit. Do you understand what divergence is on these indicators? So, see this top? Yeah, you can see this top? See this MACD, how high it is? So it comes below zero, we're going to retrace the market. Breathe in, right? Breathe in. Then we hit a new higher high. Is that higher than that?
No. And that's
Unless it's clear. That's divergence. How often does that come up on the chart? Not very often. Not very often. Maybe once a year. I'm not going to spend time on it because it's not about indicators, and we can go through it personally. And you can go, it's divergence here and there. I go, that's not divergence, that's not divergence, that's not divergence. This is divergence, right? Just another sign, right? So I get divergence. I'm going into a bear flag, right? Do I just stop out of all my trades halfway through this? No way. Because the market will do what it wants to do. And I said that before, didn't I? There's nothing stopping that being a false breakout, like a false pattern. Does that make sense? And it breaks to the upside. And we get our next moving forward. Then I just go, that was a failed pattern. Let's move on. However, it wasn't a failed pattern at that time, and that's why I wanted to draw it for you. But what it does is it starts bringing my attention to the screen. Does that make sense?
Yeah.
And then, I told you these Morobuzos, I look up because that's serious selling, right? When it opens here and closes there. That's Bear City. There ain't too many bulls. They're getting smashed out of the park. And so, to me, that definitely would have been a sell signal that day, right? I have MACD divergence. I prefer to see that on a weekly chart. Remember, we're using this for principles of trading, right? And then this is a massive breakdown. And then it tends to, look at all those resistance up, all those spikes up here, spike up, all these shooting stars. No, there's plenty of bears moving in there. And then it just tanks. And then you had a couple of little trading opportunities, we've talked about those. And then you get your moving reversal, right? Moving right along. So, unfortunately, ladies and gentlemen, we started here in 2018, we ended here, we're down 419 points or minus 7%. The other thing I want to point out, once again, look at these hammers. A lot of tweezer setups, tweezer setup, hammer, tweezer setup. I mean, I've gone through nearly 10 years, like, is it the same thing after another? It was almost boring, wasn't it? What I'm trying to say is like, and look at this, a massive shooting star right away against it. It's like, anyway, that's 2018. Sorry, I get excited about this. Alright, so let's have a look at 2009. So we opened on the 2nd of January this year at 5646. On that day, which is this day, and you know the interesting thing, the day before that, which was the last day, December 31st or 30th, there's a big shooting star. We're under the 200 day, that's all bearish to me, right? So we open the market in the new year, and the first day we get down. Now the interesting thing is we go down the first day, and from there, that I think that ends up being the low for the year. I think I write that there, don't I? I'll see it on the next chart. But the interesting thing here, 2019, the opening day was the low for the year. But generally, if it opens up like that and a big Morobuzi candle, I'm going, this is going to be a bad year. That's what I would have said the first day. It's going to be a bad year. It was the opposite. However, the next day, it sort of turned around and off it went, melted up. Okay, so let's have a look at some of the patterns, right? Bullish flag, continuation. You see the flag, pole, and then the flag, flag, pole, and then the flag, and then we have a different one. That's called a pennant. Same family, one's a flag, one's a pennant. Okay? But we get a continuation pattern, 3 in a row. Generally, if you have stocks, particularly like specky stocks, when they do one flag, I find they generally do 3 flags. Funny about that. I find it lots of times. So if it starts, when flag patterns start appearing, it's generally in a bullish market environment. It's another thing that tells me the market's bullish. Flag patterns, it's very bullish. Because you see what happens out of it, you get the flag pole, just off she goes. Because that's tension building up there, tension, tension, tension. There's a fight between the bulls and the bears, there's not enough bears. They kill the last few of the bears and off it goes again, right? Now, I know you can't see that candle. What do you think that candle is? Up the top, the last top. Shooting star. I'm just trying to point out that it's pattern after pattern after pattern. Right? And this is at the end of this. And like, if you don't think you've had a good time this year and that, you know, I sort of pay attention to those shooting stars when we've had a long run like that. Does it make sense? It's telling you the bears are moving in, which they did. And what pattern is that we're in now?
It's a bearish flag.
Very good. Is it any in those books there? Is it in the books? Bearish flag? I'm sure it is. So, let's have a look at my analysis now of the market, right? And what are the last 2 candles? We said that at the beginning, didn't we? Going back to the final chapter. Tweeze tops. Does that mean that it's got to go down tomorrow? No. So I plan for both ways, right? When I trade, I plan for both ways. Every day. Does this, I do this. Does this, I do this. Does this, I got plan A, plan B, plan C, plan D. Because I don't want to make decisions in the heat of battle. We'll go through that in a minute, if that's okay. So there we are. We're at a new all-time high. So we've got a new all-time high of 6875, but the market closed at 6845, right? So it retraced 30 points. So there's sellers moving in. That's what I can see by the charts at this point in time. I've discussed that. I'll get ahead of myself here. We've talked about the bear flag. Right. Now, the whole way through, I've taken you through daily charts. This is a weekly chart with the XJA because exactly what you said. Is the pattern still there? Yep. These are easy to see here. Look, they show up on weekly charts too. But I don't want to be going off a weekly chart, I want to be going off the daily chart, right?
Diversion.
What?
You have a diversion.
Yeah, I'm getting to that. Here.
Yeah. No, at the end. price is higher, the lengthy is low compared to the high.
It's not divergence yet. That's why I wanted you to do that, walk straight into that one. It's actually not divergence, but it will be this week. So you'll be right this week. But you're trying to
Why are you
front
saying no, it's not yet?
because it hasn't crossed his line, it's going to cross the line.
Hang on.
This has to cross the line before it's divergence.
So the fact that it's scoring higher, even
Yeah.
below the line, is not a divergence?
Well, Elder would say it's not. Me and him had a serious argument about this once.
I think we're gonna have an argument.
We're not having an argument about it. It's not divergence, okay? In accordance with Dr. Elder, that's not divergence. Did I not have the argument, Neil, or what? He's a witness?
Sorry?
Neil,
Yeah,
you
it
were
was, it was before 12.
before 12 o'clock too. Oh, he wasn't happy. Because we had to read the book twice before I went. I go, no, that's not divergence, he said, in front of us. We're moving right along. Well, we can talk about that again. To me, yeah, it is divergence, okay? I'm just being careful who's listening, right? Doesn't matter, it's the same thing. And another good point, look here, shooting star, this is a weekly chart how high it is, and look, we can't even get past zero. I haven't seen a weak map do like that. I can't remember one. It's very weak, right? However, as I said, Dr. Alexander Elder would say that's not divergence yet. But anyway, it's telling us that the momentum's slowing down, okay? What are we looking at? Okay, so I don't know if you know, on Friday night, Friday night? That should say Friday night. US had a holiday, Thanksgiving on Thursday, and then they had a half trading day, like we had on near public holidays. They close at 2 o'clock and it confuses you and all that sort of stuff. Another trap for young players. The reason was because I always look at the US futures, right? So when I looked at US futures when I was whacking this thing together yesterday, they were down the market was down 0.4, but it would have been a very weak
I
market.
wouldn't even pay attention to that because it's a half day after a holiday and it's just,
Well,
I wouldn't even bother looking at it, but yeah.
no, but I mean, I have routines, I stick to my routines, and I can say, if I start picking and choosing and destroying what I'm looking at, you know what I mean? Like, I don't do that, right? So it's, so no, I know it's a half day, but it's still a day's work for me, right?
No,
So
I discriminate. I'm just saying that part of my exclusion rules is just to ignore days like this.
Yeah. Well, what I was trying to say is that it went down half a point, but you've got to be careful with it, and I'm agreeing with what you're saying, except the biggest market fall that I experienced and the biggest market melt-up I experienced was through holidays, right? Just when you think you can just go and lie on the beach, guess what happens? We go through that, we did. It happened in 2008. It was 24 days, I think it went down a road. Except I'm at Byron Bay out of wireless range because I'm thinking, oh, the fundies, they're going to take holidays just like me. A week later, because I decided to have a week off, what's up? WTF? It's too late, it's melting down, right? And I'm just going, I give you 3 experiences. There's that. I remember being in Thailand and I went up to somewhere for 3 days and I was that heading into uranium stocks. And I think I was up a monstrous amount and I was feeling really good about myself. That's when you should be worried. There's another heads up for you. And I thought I could just go out in the bush trail and motorbike and do whatever I like and look for cobras up the north of Thailand and all this sort of stuff. And I got down into civilization again. I thought I'd open up the laptop and it was like minus 30 grand on my account, which probably said up 70 before. And I just went, no, that's wrong. So I turned it off again. I thought something wrong with this. Like, that can't happen in 3 days.
Seriously.
Something can't happen in 3 days. I turned it back on again. And now that is wrong, right? I'm going, what's going on? Like, I thought there must have been a market crash, right? And then I'm going, there was a tsunami in Japan. I go, so what? I want to know what's going on. Yeah, that's what caused me grief, right? tsunami in Japan, and then meltdowns in nuclear reactors, and blah, 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 blah. Because that was the last ball run in uranium, right? I was super keen on it, and greedy as well, unfortunately. Anyway, you get my lessons for free, don't you? My point being, and I think there's another Christmas period, happened last year. So, when I showed the internals, they were telling me at the end of last year, right, everyone, we'll go through that now. No more questions from you? You're
Oh, no, I think
finished.
too bad. Too bad. It's not, I'm not gonna,
After you can answer these
I'm
later,
not gonna listen to
it's
you.
just we're going to get through this, right?
Yeah.
So, here is another one, right? I was convinced, come back, market's going to go, up we go. But it was the same thing. If you look at the actual, you know, this day here, what date that was? What day is the 25th? Christmas. You know what that day was? Do you know, Christmas, I'm pretty busy. I've got a family, I'm cooking shit. I'm not looking at charts. But I was convinced, come back January, it's going to be on. Be on this year. I thought I'll go up for a month at least because we've had such a downtime. The internals are telling me I thought I'm going to trade this V reversal. No worries. The V reversal started on the 24th, not the 4th. This is my point, right? You don't watch markets. Now, if I was in your chair, so it's the 24th, the market's only open half a day, I don't pay attention to that. That gave me a fantastic hammer signal. It was like all the years I've shown you, gave me that signal on that day. It's actually a tweezer bottom. So it backed up from the day before. I'm just telling you, like, if you start getting these rules that set you up for failure. Now, I have 3 experiences in my life that involved a lot of money, and I can give you that right out of your head. If you want to trade, right? Is what I'm saying.
Parliament's not going to take up your time.
No, right. I'm trying to help you here by saying this. This is not having a go at you.
I know you're not.
Yeah,
I'm not
it's-
saying you are. I'm just saying that there are some rules that obviously you have to have your own rules, and one of them that I follow, is that on a day like this, I don't pay attention. And if you're trying to pick the bottom, okay,
Yeah.
actually, you don't have, most people cannot do it on a day or the second day. You need to wait for confirmation anyway. So if you miss the start, that's okay, as long as you pick the turn.
No, look, it's however you want to trade. Sometimes some people aren't comfortable, they don't want to trade that, they don't want to trade till it's up here. That's fine. I'm trying to give all different people different skill sets here because I've got a diverse group. Does that make sense? That's not for everyone. I started off by saying you want to be experienced. If you want to pick up the cheapest bargains you ever get and you master your skill, that's where you're going to get it in the bargain basket. That's all I'm saying. And I was looking for Elder's book over there because I can open up the page and Elder says, while you're asleep, the market will put its hands in your pockets. And that's what it means.
Some recommend if you're going on holiday just to get out of all positions and then you don't have to worry.
And that's not a bad idea. I can go through that experience. I just don't have time, right? Because we're going to move right along, but that's a good idea because your trading plan should tell you when to do this stuff, right? Right, let's move right along. Okay, now we're going to compare the XJO ASX, and that's my 10 years. So we started up the top there. Look, we've got the top. Now, US market, the top there. By 2013, we were breaking out of the top. That's in 3 years, not 12. So, 2013, we're here. This is hard to trade, right? I'd rather trade something, see that's more textbook to me. If that's a stock and that's a stock, which one would I trade? This one. That one's a problem. That one does this. I don't like this. I like this. So,
I actually love these.
good on you. That's okay. It takes all of us. So there's there. So this stock market is like up 100%. Ours is what? Zip. It's like your question.
It's been like this for the past half hour, so what are you telling me?
No, but you know what I'm trying to say, right? So, if these were stocks, I'd probably prefer to trade that, right? Mobility prefers volatility, and good on you, mate. If you like volatility, I like volatility at the right time. I've shown you when I like my volatility, and they don't come up very often. Here I'm going, oh, hammerhead. That's once or twice a year, you know what I mean? Or some use it as 4 times in a year. They're quite rare. You wait for that. Like 12 months is a lot. Well, I know at my age, life's gone quick, but 12 months is a long time when you're a trader, isn't it? Everyone's like, when you're in the zone. My point being here is this is all very interesting, right? Now, let's continue because it's all here. So it's taken us 12 years to original time here. Where to from here? S&P hit its previous all-time high in early 2013, was up 50% by late 2016, and is up 100% currently. So where to from here? Now, the next part of this session is my opinion only. I don't expect you to take that away. I'm just telling you how I personally feel as a trader, right? That's what, and just gives you an idea of how we think, right? On Thursday, we had another day and another record high for the S&P 500. Sorry, that should probably read Wednesday. That should have been. Apologise, because Thursday there was highs. I get confused because I'm usually doing this in the day and the markets the night. Shows you don't have to be smart to do this. It has been one-way traffic for 6 weeks now. The market has not seen a fall greater than 0.4% in the last 6 weeks. This is US markets, right? Because this is where I take my information of where I think we're going. If that makes sense? And I'm going to explain exactly why I've got this, okay? The last 12 days, it has been less than 0.28%. Like, there's no trading for Unibill because there's no volatility there. Effectively, all the volatility is being sucked out of the market. I trade options as well, which is good because options, you can sell options because you can buy options because volatility is low. Now, let's look into that. All right, so let's just have a look at some of the news around the world, right? Let's just see how we feel about it. Has anyone heard of a US-China trade war? Do you think that might affect the market? What do you think? Yeah? What about an impeachment of the US president? What do you think that'd do to the market? Seriously? And the market generally likes the Republicans. Imagine if they kicked him out. Has anyone seen the US debt clock? You need to buy razor blades before you have all of that. They play the clean-up tools, right? That thing sitting at $23 trillion or some stupid thing. That actually works. So if you actually Google that in, but don't look at it for too long, it's frightening. And you go, how do you ever pay that back? I can't find one economist that will go, you can't pay that back, it's impossible. Anyone heard about Hong Kong democracy protests? Oh, that'd be good for the markets, wouldn't they? Seen the Hong Kong market? No? Do you think that could affect some of the trade talks? Didn't you just pass a bill supporting them? What's going to happen next week? I wonder. Civil unrest in Lebanon. People know what's going on. Well, we live in Manly, we don't see all this. Have a look at this. Like, seriously? Like, what's going on there? There's 40 countries with zero interest rates. There's unrest in Lebanon. Have you seen what's going on in South America? Venezuela, Colombia. Like, seriously? Iran. Civil unrest there, have a look at that. We're all being, they're hiding all this stuff. It's just stupid. Social unrest in South America, it wasn't just one country, so I didn't want to put up all the slides. It was Colombia, there's Venezuela, it's horrible what's going on, right? But, so, okay. So here's the other side of the coin, right? So there's the news side. These are the internals I'm going to start talking about, right? You ever heard of the VIX index? Yep. It's a volatility index, okay? Can you see where it is? It's at, I'll do it, that's 12, right? That's basically the line in the sand. If you look back forever, it goes below there very briefly. Whenever it reaches this level, and I didn't get time to do it, I was going to show you that this level, I'll show you my internals versus where all the turns are in the US markets, right? The US markets turns, generally ours turns, so anything above 20, once it gets above this level, then there's fear in the market, right? Then there's the extreme, this is another internal, right? It's called the Fear and Greed Index, right? You might want to write this down. It's on CNN, and the hedges use it, so don't worry about that. What does it say at the moment? It says extreme greed. It rarely gets into that. Rarely. 1 month ago, extreme greed, right? So it's extreme greed. A year ago, it was extreme fear. Total opposite, right? Remember I talked about the end of, it was an extreme fear in December. That's why I knew we had a turnaround coming. And those indicators. And if you look at the VIX, it was up at about 40. So it does the opposite of what I'm showing you now, right? Okay, then there's the skew, right? And basically we don't have to worry. So the skew at the moment's not telling me a lot, right? Because it has to reach over 135, it's 129 at the moment, but it's horribly close. And I'm telling you, when all those internals line up, look out. But generally it will give me, I've given you the stuff there, you can go and check the charts on stock charts, right? There's a lot of stock charts, we're going to go through another one in a minute. These are internals that all the hedges use, right? So, you can't impose your will on the market, right? The market doesn't care what we think or should happen. Does that make sense? So I'm showing you, the internals are telling me, like everything's telling me it's bearish so far, okay? So I'm saying to you, you could be inclined to think that my skew is towards bearishness, right? Is that right? I'm showing you all those bad news articles, I'm showing you the internals are fairly bearish, right? Except the charts aren't bearish, this is the problem. Our expectations can cause significant stress if they do not line up with the reality of the marketplace, right? And my point being here is try not to get convictions in the market, right? Just maintain your discipline. Don't get convictions because if you get convictions in a time with your ego, you're set for a disaster, I can assure you, right? Price is the ultimate arbitrator. So there's all this bad stuff going on, right? The market doesn't care about trade war. That's what the charts are telling me. The market doesn't care about the trade war, doesn't care about Trump's impeachment, doesn't care about global social unrest, doesn't care about wars that are imminent in Iraq, like in the Middle East, right? It doesn't care about the global debt or the US debt. I'm just telling you, the market doesn't care about this. It doesn't, have you heard about the inversion of the yield curve, 10-year bond yield curve? Well, it inverted, turned around, but everyone thinks we're out of jar. But if you look at history, 9 times out of 10, it inverts, then it comes back up, and that is the pre for a recession in the US, right? So it'll be interesting to see what happens. So it's all on cue if you look at that. This is what the market cares about. This is the Federal Reserve and their money printing, right? So that was their first money printing exercise. Started, is that what they call it? QE1. So QE1, let me point it there. That's QE1, QE2, so market goes up, QE3, quantitative tightening, market has a hissy fit. Market had a hissy fit because it was quantity and tightening. Guess what the reserve did? It's pumped nearly 300 million back in. The money it took out, it's nearly been pumped back in. It's pumping it back in quicker than it took it out. This is what the market's watching. So I know if there's any tightening, then it's going to be quite bearish. Except that's not what's happening at the moment. And I'm just saying, I'm trying to line up markets and this and that. It doesn't care about all that other stuff I've showed you, which is quite depressing if you ask me. Glad I live with Manly. However, I'm just saying there seems to be a correlation here though. And I can't see, they don't look like stopping doing what they're doing. So this is it, ladies and gentlemen. I'm expecting a pullback. And this is not due to fundamentals, right? It's got nothing to do with fundamentals. My call is based on those internals I showed you, right? And I'll do a session maybe next time or coming up soon. I'm going to take you through, there's 10 things that I watch, right? And US market's one of those, right? So monthly S&P chart, weekly S&P chart, and daily S&P chart, and there's 7 other internals. One of them is transport, in the Dow transport sector, because generally when the market tips over there, it's always the first one to tip over. It's just interesting knowing these things. So you're watching those, and it started tipping over. So the internals are telling me we're getting very close, if not. But because of this quantity easing, because of this market, and you saw that US chart, that's bullish. Except we've had this melt up, so I'm expecting a correction, which is great, because all that does to me is give me an opportunity to join the party, if that makes sense. If you'd asked me months ago, I would have thought we were having a crash this year. I think we might have one maybe for another year, what's going on now. But I've never seen these, filling with markets and economies and all the other stuff that's going on, right? Except price actually loves it. So, as a trader, what I'm going to do, okay, so I'm expecting a pullback, as I said. So the put call ratio is a 3-year low, right? That means everyone's long and complacent. There's heaps more calls out there than there is puts. That means no one's hedging themselves, right? That's a concern.
Where do you get your put?
Or if you look at the put call ratio, it's got actually a 10-day moving average, and that's the thing you need to watch when it's below that.
Where do you get your put call ratio from?
CBO, the futures exchange, Chicago Board of Futures. Oh shit, time. The VIX is around 12-month lows, right? The S&P and the Nasdaq are trading at 3 ATRs above the moon and have for weeks. If you go back 10